Hi, I'm Ryan Geary with Resolute Wealth Advisor, and thanks again for joining me for a quick update on the markets from the first quarter of 2025. We've seen a mix of encouraging economic data and market volatility, and I want to help you cut through the noise so you can better understand how it impacts your financial goals and why staying focused matters more than ever. Let's start with the US economy. Despite ongoing concerns around inflation and interest rates, growth has remained surprisingly strong. The latest GDP figures show a 2.4 annualized growth rate for Q4 of 2024, slightly down from the previous quarter, but still ahead of the long-term trend. This strength has been largely driven by resilient consumer spending, healthcare, and increased imports. Job growth continued with 151,000 new jobs added in February, and while the unemployment rate ticked up slightly to 4.1%, it still reflects a solid labor market. On the policy side, the Federal Reserve is holding rates steady, keeping its benchmark rate between 4.25% and 4.5%. Inflation is cooling, but more slowly than expected. The Fed's preferred inflation measure, the PCE index, is projected to end the year around 2.8%. While inflation remains above the Fed's 2% target, the general trend is moving in the right direction. That said, uncertainty around tariffs and fiscal policy could keep prices sticky in the near term. Now let's talk about markets. It was a tough quarter for the US equities. S&P 500 fell by 4.3%. Small caps were hit even harder, down nearly 9.5%. The Nasdaq, which is heavily tech weighted, dropped over 10%. But it wasn't all negative. Sectors like energy, healthcare, and consumer staples saw gains, providing some cushion. In internationally developed markets outperformed the US, with Europe leading the way. Bonds offered some welcome stability in Q1 as long-term interest rates declined modestly. Bond prices rose. Intermediate-term treasuries and corporate bonds posted strong gains, with the Bloomberg US Credit Index up 2.7%, and global bonds also saw positive returns. This is a reminder that fixed income continues to play an important role in diversified portfolios, especially in uncertain environments. So what should we expect looking forward? The outlook remains cautiously optimistic. The economy has shown it can bend without breaking, thanks in part to strong consumer demand and flexible policy making. Yes, risks remain: tariffs, government spending debates, and persistent inflation, but they're being met with proactive responses. And history shows that when pressures build, policy tends to adjust. That's good news for investors with a long-term view. As always, our focus stays on what we can control, remaining diversified, staying aligned with our goals, and avoiding emotional decisions. If you have any questions about your portfolio or want to revisit your financial plan, let's schedule some time to connect. Thanks for watching, and I'll talk with you again soon.